Good morning, everybody. Just give me one moment and we will get started. Good morning, good morning. Alright, good morning. Okay, just give me 1 second because I want to add. Trying to see if I can add a clock to the stream. I'll have to set up the clock later. Okay, so let's see. I think tomorrow we have our big data sets. Just want to double check. Thank you, Jesse. Good morning. It's a little too soon to say if we're going to see the market being bullish or not, because there's a couple different things that we have to look at here. Give me 1 second, change the template. So I want to see the 4 hour. So one thing I am looking at is that we did close this inverse cup yesterday. And with that being a closed inverse cup, what this buying could be potentially is a handle if we're heading deeper into the downside. Now, yesterday we did have the lower Bollinger on the daily time frame, day 1, which usually we expect day 2 to give us a lower low. And from that lower low, we do expect upside consolidation. However, yeah, we do have a very well-formed inverse cup form there. So either this is going to be that inverse cup and handle to the downside, or we are going to try to close that cup to the upside and continue upward. So we'll figure that out when it's closer to open, when we can see the VVIX and everything. With semiconductors, they have not closed that cup to the downside, but they haven't really invalidated it either. This isn't a bullish cup just yet. So if we're going to head to the downside, semiconductors is showing us that there's room to do so. Let's see, QQQ. Inverse cup isn't closed all the way either, which means that QQQ is also showing us that we have potential downside here. But again, this can turn to upside too, so we'll know pretty early in the trading session, I believe, whether this is going to turn upward or not. Now, also, one thing we have to think about is that when they push the market up in the pre-market really hard, um, that does give a lot of reason to anticipate the fall. This is kind of like the last couple sessions where that pre-market, early trading session, they pushed it up really high, then we shorted it down. Basically, it's been that way the last, 3 or 4 sessions now, where they pushed it up in the pre-market and rejected downward. If we do have another rejection today, then very likely that's going to be based off of the market trying to price in this SpaceX IPO. Now, the 5 mod today will be pulling down towards I want to say closer to that 736, 737 range. So we'll have to check that on open. But I do want to mark that. Let's just mark it at that 736. And we'll adjust that on open. Because if we're going to be retesting support to the upside, then that's our nearest support. However, we do have a very key range at this 716 gap, which on the hourly, that's basically sitting at this support right there. But on the daily time frame, that would pull us below the 50-day moving average. So heavy selling here definitely can't be discounted at this point. I still think there's plenty of room down for the market to go, even though we're already in that lower Bollinger range. So 5 minutes till market opens. So look at Bitcoin here. I mean, even Bitcoin's building bearish structure here. So that can be, a signal that they will try to sell off equities. But again, it's kind of too soon to determine just yet. We need to see what our volatility instruments are at. We need to see what the HIG is at. I'm not shorting Bitcoin right now, but I should have been. You know, it's something I've been talking about since basically the 75,000 something range. But I still expect Bitcoin to drop down to the 46,000 fairly soon here. Probably in the next, 1 to 2 months tops. Right down in that range. 49,000, excuse me, not 46,000. Sorry if I sound tired. I'm not tired, I'm just not exactly well rested. Prepared for the day though. I'm just not going to be as talkative as usual. So we have 2 minutes until market open. Now, one thing I'm seeing on the 5 minute time frame here is a pretty well established head and shoulders. We have the head formed right there. Right shoulder is literally right at the top of where the previous right shoulder was. So if we're going to reject, then it's kind of what I'm looking for, is for that to reject in there. But potentially, this could be that cup and handle forming. So I'm going to mark this in a darker yellow right now, just so that's not as annoying. Okay. And market is open. Now we need to wait a couple minutes for the VVIX to update. And currently on the 5 minute time frame, we don't have an entry just yet. Now on the daily time frame, I just want to look at the moving averages. Okay, so the 5 miles at the 733.50. Okay, so that's very good to know. Waiting on the update for the VVIX. Okay, so it is pulled down to the 106.14 currently. Not entering anything just yet, but this is looking very likely that this is going to try to form some inverse cup there. VVIX is at the 106.20. So the thing I kind of dislike about today so far already is that if we're going to get a short entry in here, we're not going to be able to pull up to the upper Bollinger just yet, because that would invalidate the head and shoulders. So if we do pull up to the upper Bollinger, actually starts to create some bullish structure. VVIX dropped to the 105.90. It's back up at the 106.12. And let's check what's going on with our HIG. HIG had a low of 79.53. It's currently at 79.57. QQQ looks very, very likely that it's going to pull down and close this inverse cup. And let's check semis. Semis have pulled up. Now for semis here, I'm looking at more of this as this head and shoulders if we're going to get that structure. So I want to see if semis keep pushing, because they'll be really important to determining what's going on with the SPY. SPY very close to closing that inverse cup. So what I want to see here on SPY is if we close this inverse cup to the downside, I want to wait until we create the handle on that cup to basically enter shorts on that handle. Now I don't want to enter calls into this even if we're getting close to that lower Bollinger. Yeah, based off today, I think I want to grab just a couple of those 725 puts just to get started with. Let's check the VVIX really quick. So 106.28, yeah. So I want to go ahead and get entered into a couple of these 725s. Now the IV on these are a little high, so if you want something cheaper, I would try to target like the 722. But with the 725 put, I'm also going to take some sort of upside hedge. So our upside target is going to be around that 733 today. So that means I want to grab one of these 731s. And now my position is hedged. So if we get that upside push, and if we don't invalidate this smaller inverse cup right here, then I will cut my call on the handle formation to the upside. But I'm pretty much hedged for the day. And now we can see if the structure is going to play out in our favor to the downside, or if we're going to get our upside support retest. We're seeing volatility still picking up, so it's at 106.24. And I want to see the HIG. HIG is at 79.54, so it has been selling since the morning. And let's check our semis. Semis did give a pretty quality short entry here. So we should see this kind of echo throughout the SPY as well. And our upside today is large if we're going to have the upside. Semis are telling us that potentially, they could be pushing up a whole $15 roughly if we're going to get that upside push. So that's why I have both the put and the calls positioned currently. Our downside target on the day is pretty massive. Basically, we should be expecting to clear this entire 121.23 to the downside. Volatility is at 106.37. And semis are starting to sell down a little bit. Now with semis, we do want to see them pull down basically all the way to this 548. So we do have a lot of downside within semiconductors right now. But we do want to see that occur so that it cancels out any potential bullish structure that's forming currently. So we have a couple different ranges that we can aim to take profit on, which go outside of what we're looking for within our Bollinger Bands. So there's this 725.32 and then the 721.23. Now again, I do expect a lower low out of today during the intraday because today is day 2 of the lower Bollinger, which usually means we see a lower low into upside consolidation. Volatility is at 106.91. Starting to see a little bit of selling out of semis, but we need to see quite a bit of selling. We need to basically see this, again, 748 taken out. Now the ADL on the day, which it finally allows me to show the ADL on the computer, um, it's just showing nothing but selling right now. It's just basically dropping off straight into the ground currently. So that is showing that there is a lot of selling going on in the SPY. Volatility is at 107.08. So we should most certainly see this 725.32 taken out. That will close an inverse cup. From that inverse cup closing, we can anticipate a small handle to form here before heading down to the next level. Volatility is still increasing, so it's at 107.13. Semi seeing a little bit of a uptick in the ADL. And again, this still can be this cup and handle, even though it looks pretty nasty right now. Volatility at 107.07. So pulling back very, very slightly. I want to look at the 1-minute time frame to see what semiconductors are doing. So potentially they're trying to form a smaller head and shoulders here. If we see a rejection, basically at this 560.82. We'll see if that plays out or not. And let's check our volatility again. It's at 106.98, so pulling back very slightly. When would it be a good time to close the call? Um, Currently we don't want to be closing these calls at all, just in case the market, flips to the upside, which could happen very, very quickly, even though we're seeing our volatility still extremely elevated. Semi starting to buy up a little bit, which makes it look like they're going to close that upside cup. A little bit of a pull down in the VVIX as well. So it's at 106.75. Now I want to see if this gets invalidated all the way to the 729.94. Technically, that could still be that right shoulder liquidity though. So if this doesn't complete to the upside and we do see rejection prior to that, then that would be a fairly good short entry. Just have to be very cautious today because we can absolutely start buying to the upside. Basically only need another $8 out of semis to complete this cup to the upside, which isn't unreasonable at all. Volatility is at 106.41. Now I do think I want to add a put here because again, we do have the upside hedged, and if we're going to take that upside, it should land pretty well. My upside is already basically profiting over the puts we opened. So I'll lightly add to the puts here. Just in case we get this rejection downward. Now our volatility is at 106.26. So it has pulled down quite a bit. It was at 107.20 something. So essentially either we're going to push it up to the daily 5 mo, or we're going to have our rejection to the downside that we talked about earlier. Semis are pulling down a little bit. Not a whole ton yet, but they are pulling down some. Our 5-minute ADL is showing a little bit of a spike here. And volatility is at 106.03. So we have validated this smaller inverse cup here. With that invalidation, we do have a smaller bullish cup. So we're in between a lot of structure right now. So that's kind of why I'm very willing to sit in both these calls and puts currently. Either the call is going to, you know, basically blast off and profit out all of my puts, or the puts are going to land and, you know, profit the calls. VVIX is at 105.24. So still pulling down pretty aggressively. And now we wait. I want to see if we close this cup to the 131.36 because that will be pretty important for this larger cup and handle structure. VVIX is at the 105.31. So technically this is actually starting to open a short entry as well because we are within the upper Bollinger. While it might be somewhat invalidating this inverse or this head and shoulders, it still hasn't done that entirely just yet. This could still be that right shoulder liquidity. And as long as this cup does not form to the upside, then this inverse cup can still be holding as well. Volatility is starting to pick up a little bit though. It's at the 105.38. Let's see what our semis are doing. Getting very close to closing this cup to the upside. But even on the semis, it's telling us that there's a pretty decent short entry right here. So this does have the potential to still reject in here pretty hard. Pulled up to the 131.57 so far. But there's still a little range to fully invalidating this inverse or this head and shoulders to the upside. Should be very likely that they take that level though. And with that level, that kind of pulls the 5 mile lower bounds into range. I just want to mark this out because that's that 5 mile testing range, and that's on the daily time frame. So either we're going to pull basically all the way up towards that 735, or we're going to find a rejection prior to that to reject that 5 mile test. Let's check semis again. Semis did hit 169.30. Currently at, or not 100, I mean 569.30. Currently pulling down a little bit. Now they have not closed this cup to the upside. So there is still some room. For that to be claimed basically. Our volatility is at 105.29. Did pull down to the 105.17. So just a little bit of a spike, but not too much yet. Now, if we're expecting the upside today, I kind of do expect to close all the way towards this 738, 38 range. So our upside's very large, our downside's very large as well. That's why we're positioned in both calls and puts currently. Even with those additional puts that I added, the calls are currently profiting over them. So if we do have our downside swing, those puts will gain their premium. Volatility is starting to tick back up again, so it's at 105.36. Now, even though we do have some bullish structure on semis, we do have still potentially some bearish structure forming here. So if we do see the pull down, do see the right shoulder forming, then we'll look for that bearish structure. Our VVIX is at 105.39, so still slowly ticking upward. 105.42. So we're not out of the selling territory just yet. Volatility is at 105.53. Semis are starting to buy up a little bit. Volatility is at 105.50. So we're not really seeing that big spike upward just yet. And the HIG is buying upward a little bit. So it is at the 79.65. Did have a low of the 79.52. So far the HIG is telling us that, you know, there's a little bit of an expectation of upside buying so far. Semis are looking very likely to close this gap to the upside. VVIX is at the 105.23, so pulling down very slightly. So at this point, basically the calls are the primary position while the puts are the hedge. semis only need $2 more to the upside to close this cup, so I am fully expecting that to occur. Yeah, it's looking very good um, to the upside so far, but we're just going to be super patient with holding both of our positions, um, just in case we do get some major rejection in here. Volatility is still very elevated, and with it being at this 105, basically if we're going to be expecting that type of upside buying, then this is going to drop down very aggressively. But so far we haven't seen that yet. Yes, it's down $2 from the high of where it was this morning, but in terms of VVIX, this is still not indicative of buying just yet. So we have to be a little cautious with that. So far, we haven't even been able to really push into the lower bounds of the 5 mil just yet. So this can turn into a fairly large rejection if we are planning to reject the 5 mil. So until we really start pulling into this 5 mile range, I don't want to be cutting the puts. Our calls will massively outprofit the puts at that point. So I'm not too concerned. And our volatility is at the 105.25, so pull down to 105.04, but still showing that dealers are hedging their positions a little bit. But yeah, if we can't break into this 5 mile range, then that's going to be very concerning for the upside anyway. Volatility at 105.30. So still just kind of sitting in that range. Semis did get up to the 572.07. We needed to pull to that 572.43. If it does reject, would we sell the calls? We'd need to see some really strong signals of rejection to sell the calls at this point. I mean, we'd basically need to see the VVIX pulling back up to that 107 range. We still holding SOX. Let's see. If you're talking about the 6 calls from yesterday, then no. But I did sell those yesterday. I want to look at the daily. So for semis, the 5 mall is at the 557.04, 20 mall at the 553.33. So semis might be trying to build a support bounce off the 20 mall at this point. So far, reclaim the 5 mall. So again, if we're going to reject the lower bounds of the 5 mall, that could be very concerning on the SPY. We're seeing volatility at the 105.38. And we're seeing our ADL did pull upward, but now is getting very close to the low of the day again. My puts are actually starting to gain a lot of premium currently. Volatility is spiking upward, so 105.66. But again, we want to see that pull up basically to that 107 plus. Now the thing with semis here, doesn't look like much, but technically we didn't close the cup fully. So until that cup is fully closed, this isn't fully a cup yet. Might look like it's only 40 cents off, but that, that does matter. Volatility is at 105.58. So it did pull up to the 105.60, I believe. Yeah, it's at the 105.65 now. So if we continue to see our volatility picking up, then this should be a 5-mile rejection to the downside, which again, we're just continuing to hold our calls, continuing to hold our positions. No reason to rush out of anything just yet, because potentially this could be a smaller cup and handle. And with SPY here, kind of the same thing with semiconductors, but we did not fully close that cup to the upside, which hasn't fully invalidated this bear structure yet. So if we're going to see an invalidation of some of this bullish structure, then I would expect this to form an inverse cup all the way to the 726.36, basically that low of the day. That would very much so tell us that we're going to be heading down much further in the day. Volatility is at 105.87. Now, if we do get this cup closing to the downside, then I will use the handle on this cup to exit the calls in that range. But we do need to see this inverse cup close before we do anything of that sort. We're just in between too many different structures right now. Volatility is still picking up though, so 106.15. And let's check the HIG. The HIG is at 79.62. So it was all the way up at the 79.68. So showing a little bit of selling here. Semi is having a little bit of selling, potentially forming this head and shoulders. But we already do have some bearish structure formed here because we do have this inverse cup. So from that inverse cup, we should be expecting that handle, which should coincide with this right shoulder. From that right shoulder, should take us down to that 555.78. So looking for that in SPY and semis. Volatility is at the 106.15. So the puts are now out profiting the calls, which is exactly why we hedged today. Actually very happy that we hedged. I hope everybody was able to, take that opportunity this morning. Now we do need to see this pull down to the 726.36 if we're going to see this inverse cup close. Until that happens, this could still be that bullish cup and handle. Volatility is picking up pretty decently though. It's at the 106.37. So if we see continuation within that, that should give us our push to the downside. But I want to look at semiconductors here for a second. Semis are starting to look pretty bad. I mean, there's a lot of downside on semis to take here. So, if semis continue selling, that's going to be, very, very indicative that the SPY will continue selling downward. For SPY, I don't mind market orders at all. The spread between the bid and the ask is usually fairly low, so it's not going to be, um, you know, killing your positions or anything to put in a market order. Now, in some contracts, not SPY related, but smaller cap stuff, you definitely don't want to be doing a market order because you could be losing like 50% of your profit off of that. But some of these contracts that are, pretty much like hyper liquid, um, you don't have to worry about that at all. Volatility is at the 106.51. Basically seeing if we're going to get our push to the 726.36 here. If we do, that's really going to open up a ton of downside on the day. But until that level's hit, we just have to wait. Volatility is at 106.38, so it has pulled back a little bit. I'm gonna take a drink of coffee in 1 second, so I'll be muted just for a minute. Yeah, I would love for SPY to pop down as well. Basically, what we need the SPY to do, and I know I have a ton of drawings on the screen, I do apologize, but we need the SPY to basically break this range, either to the upside or the downside. The upside will, obviously make our calls print, and we take this 5 mile on the daily time frame, which, that's quite a bit of upside, almost a full $10 upside at this point. Or we're going to start seeing this breaking down, and we have, a ton of downside at this point, basically, $7 of downside to take at this point. So just need to break this range on the day, and we'll be good to go. Volatility is at 106.36. Kind of the same for the upside, for this downside here. We have not closed this inverse cup just yet. So until we do, this is an inverse cup. Just like that previous structure wasn't a bullish cup. So, in between structures currently. Now on semis, we are looking for this right shoulder to build out and complete. I know this looks kind of like a wonky head and shoulders, but who am I to judge? I just see the liquidity. So I will be looking for that to reject in there to give us that right shoulder to the downside. Volatility still elevated at the 106.28. Now again, this can be this smaller cup and handle forming. So if that's going to be the case, then this should push us up into that 5-mile range. Volatility has pulled down quite a bit, so it's at 105.86. And again, this is why we're just continuing to hold both our calls and puts currently. Really want to break from this range, either to the upside or downside, so that one of the sides will really just overcome the other. Going to delete a couple of these drawings just so that we can see. Volatility at the 105.98. ADL is showing a little bit of a spike in here. Not too big of a spike, but a little bit of a spike. And let's check our semis. Right shoulder is pretty much right at the top of where the other left shoulder is at. So if we see a continued rejection into semiconductors here, that would be, indicative of this inverse head and shoulders. Or not inverse, I mean standard head and shoulders, excuse me. Volatility still elevated. It's at that 105.98. Alright, anyway, I'm gonna mute just for a second so I can drink some coffee. Sorry about that. I don't think we'll be sitting here chopping the rest of the day. I do think we're going to get either that pretty large move to the upside or pretty large move to the downside fairly soon. The reason why is because volatility, even though I've been saying it's been pulling down and stuff, this is still super, super, super elevated. Okay. When volatility is elevated, it likes to pick up very, very quickly. So if we do start seeing downside selling, then our volatility is going to, pick up massively, and Inversely, that'll also be pulling down the SPY and everything very quickly as well. Usually selling to the downside is a fairly quick process, even if it takes the entire session. Um, so this is kind of why I don't expect chop in here. Um, if volatility was between this, 92 to 80 or 98, then that'd be kind of the range where I'd say, okay, there's a mix between a little bit of dealer hedging and, you know, people actually buying. But with the volatility so elevated in this, pretty deep red range, this is telling us that a lot of people are hedging positions to the downside. Now I want to look at semis. So that right shoulder is starting to build out. And if that really plays out, then we should be heading back to the 556. Volatility is at 106.62. We should get a pretty convincing break to the downside or pull to the upside anyway today. Volatility at the 106.59. If we get our rejection on semiconductors here, that'd be very, very good for the SPY puts. Should take us down to that 726.36 range, but we do need the full rejection to occur here. Volatility pulled up quite aggressively, so it's at 106.82. So I do think our downside is starting to build. Just really waiting for semiconductors to do their rejection. Volatility 106.90. Sorry, I haven't been paying attention to chat a whole lot today. Just really trying to determine if we're going to have our upside or downside or not. Volatility at the 106.84. So just waiting for the big selling to really start up. Again, we do need to see this closed all the way to the 726.36 to really invalidate a lot of that previous bullish structure. Volatility at the 106.98. Come on, break down already. I know you want to. And break down to that 560 so that we can really invalidate some of this bullishness. Basically everything hinges on semiconductors breaking down here or not. So watching that super closely. What's my target level? So for the downside, we have multiple targets. We have this 725.32, but the one I'm really looking for is at this basically 721. It's like 721.38, something like that. That's the main downside I'm looking for, because that would be closing a very large inverse cup to the downside. Volatility 106.75. Yep, we just have to break this range. Volatility did pull back a little bit. It's at the 106.50 again. Very annoying day so far. HIG, we did see some selling down to the 79.59, currently at the 79.62. Let's see what's going on with QQQ here. I'll hide that. So for QQQ, we have not closed bullish structure yet. We do have this smaller cup though, potentially forming the handle to the upside. But that's showing that if we're going to get our upside on QQQ, you know, we still have this entire range to claim. Volatility pulling down a little bit, so it's at the 106.13. Do have this cup formed here on the 1 minute time frame. So I can form a handle to the upside. And that upside should take us all the way back up to the 131.58. If that's going to be a smaller cup and handle. Volatility once again picking back up though. Super frustrating day. And semis did not close the cup there. Just based on how elevated the volatility is, I still expect the selling to occur on the day. Usually dealers aren't going to be hedging at the 106 if there's not going to be selling occurring. Which is why I'm still holding those puts just in case. So this first target on semiconductors would be this 561.18 if we are going to get our pull down. Starting to look like that smaller cup and handle wants to form. Wish we can get a break from this range already. Either give us the upside or give us the downside. Don't just chop. Volatility is at the 106.44. The HIG is at 79.62. Was at 79.63, but just pulled down right as I was going over it. Semis are starting to pull down. So if we can get down to this 561, then that's exactly what we're looking for. Close that inverse cup to the downside and continue heading downward from that point, breaking any of that bullish structure to the upside. For SPY, this could still be that cup and handle, so we do need to see invalidation of the cup. So first invalidation would be at 727.71, and the second would be again closer to that 726.77. So we do need to see some of this bullish structure invalidated if we're going to be heading downward. Should be seeing this invalidation happening very shortly. Volatility is at 106.68. So we should start seeing that spiking upward quite heavily here if we do see this inverse cup close. So I want to mark these levels out just so that they're very clear. But we basically have to break through each of those levels today to show that, you know, the market's not going to be bullish. So those are our targets currently. If we get this pulled down to the, what is it, the 10, or the 561.15, then that will be invalidating any of this bullish structure so far on the day. Volatility is at 106.95, so a lot of signals are telling us that we could be heading down pretty aggressively here. HIG is selling a little bit, so at 79.61. Okay, so we're gonna go ahead and watch semis for a second, but I do need to get up and go get something for my daughter really quick, so I'll be right back. Oh, I had to go AFK for a moment. So, okay, cool. We got the inverse cup closed here. Also, good morning, Silver. So, with that inverse cup closed here, that is a very good selling signal. That's telling us that very likely, I don't know why I draw it. We have arrows for a reason. Very likely we're going to that 555.88. So looking for a small handle to form on this inverse cup here. But we do have the liquidity for this head and shoulders, even though it doesn't look all that great. But again, I don't judge. I just see the liquidity. But this should be taking us downward. Okay. And we also close this inverse cup on the SPY, which exactly what we wanted to see. So we're going to mark this as cleared, and that gives us our next level. We are now looking for that 726.97. And this has invalidated that smaller um, cup and handle that was forming. Now our volatility is at 107.26, so that's very good. On the 5-minute time frame, we do have this liquidity for a head and shoulders. So we should see the breakdown here pretty soon, and the breakdown that I'm really looking for is closing back to this 726.36. That'll invalidate pretty much all of the bullish structure on the day. So that's the primary one I'm looking for. For semis, that'd be pulling down closer to that 555.91. So looking for the exact same thing here. That inverse cup, forming the handle, then pulling downward. Volatility still picking up, so 107.22. So we should be getting our downside. The next target again is at that 726.97. We're only 40 cents away from that. That would have been a good trade today. I didn't think about that. We should have added some SPAXU when we were at that range. That would have been nice. We're looking for the deep downside today though. You know, we have quite a lot of downside. Again, my main target on that day, or on the day, is going to be the 721.23. So that's going to be my primary target that we're looking for. Because very likely when we do close this inverse cup, which I do think it's very, very, very likely it's going to happen, then we do have to start building kind of that head and shoulders liquidity. So potentially we could be forming, you know, a right shoulder after we pull down all the way to that 725. But with our volatility picking up, especially when we do start pushing down pretty aggressively, the VVIX by that point will probably be at, I don't know, 108, 109. So there may not be the necessity to form that right shoulder. Just this inverse cup might be all the liquidity they need. There's that inverse handle on the cup forming. So we should be getting our downside pretty soon here. Our next level is very close to being checked off. Just waiting for it to hit so we can mark that down. And there's that level. Make it a little brighter. All right, now we go to the next one. Next level we're looking for, the 726.36, which it looks like we're going to hit any second now. So once we do, I'll be marking that off as well. There's that. Okay. Now we go to our next level, which is the 725.32. We have now invalidated the majority of the bullish structure on the day. So the puts should be absolutely kicking butt. Let me open my portfolio. Yep, they are indeed kicking butt. And volatility should be picked up quite heavily here. Yeah, it's at the 108.55. So, like I mentioned, once we get down to this 125 range, we should be seeing that volatility picking up towards that 108, 109 range. And my puts are heavily outweighing the call now. In massive profit on my puts currently. And when I say in massive profit, that means like including the downside from the calls too. I kind of remember I bundle the position kind of as one. So the entire position, we're up currently. Now, when we do pull down to this 725.32, that will be potentially a small opportunity to take a little bit of profit. I'm not going to be doing that today. I want this downward level. With volatility picking up the way it is, this should be more than reasonable to have the expectations for. So what we can expect with this inverse cup closing is forming a small handle to the upside. With that handle to the upside, that's going to be your call exit. Okay. That's going to be the time that we exit those calls, tack on additional puts, and really prepare for that downside. However, if you do have a smaller portfolio, I heavily suggest taking some profits on the puts at that 725.32. Okay. What put do you have, Jin? Because basically my puts are running in the money at this point. Yeah, our volatility is at 109.46, so potentially we could be foregoing forming a handle here. Okay, we did hit our level. With that level being hit, again, that does invalidate a lot of the bullish structure of the day. But this means that this inverse cup has closed. And with that inverse cup closing, we can pull up a little bit. So just be a little cautious with that. But we have fully secured the levels we were looking for. Now we're just looking for, you know, the big level right here. Oh, that's not supposed to move like that. 1 second. Let me do a horizontal ray. There we go. So that's what we're looking for now. And I'll write a note on it too. Okay. But we should have that full expectation of closing this large inverse cup to the downside. And again, remember, we did talk about if we're going to reject that 5 mile range, then we should be pushing down very hard today. Okay. Now, everybody's put should be absolutely just blaring right now. Volatility is at 110.20. So, dealers aren't slowing down here. Our ADL is, also showing that. And for those of you that were in the class last night, we talked about this being kind of the lie detector indicator. Well, this is telling us exactly what's going on currently, and that's a ton of outflows. Okay, just a ton of outflows currently. It's okay, Silver. Making 1% is still a big deal. I know you don't need to hear this, but kind of just for everybody else, you know, trading's mostly about risk management. It's not about being, having every trade win. It's about being able to keep your losses very, very small. So even if you're only making, 0.5%, 1%, whatever, it all adds up. And all that adding up is going to, just continue to compound. As long as you don't lose money, right? Pat, I hope I'm blowing your account up in a good way. Like fireworks type blow up. So again, remember we should be seeing a very small reprieve in here, but the ultimate downside should be heading down to that 721.23. And I want to look at semis here, see what we got. Okay, so semis cleared the bottom of that cup. Perfect. Now this would kind of be that next level I'm looking for. Semiconductors very likely will take the liquidity to form this cup and or this inverse cup and handle to the downside before fully claiming that downside. But that's what I'm looking for on semis. Now volatility is still picking upward, so I am going to use this opportunity to start slowly exiting the calls. And now I just am going to wait for our further downside. We should be seeing, an absolute ton of it today, based off of the volatility being, at 110, was at 110.30, it's now at 110.48. I think there's room in those 719s. Um, Give me one second, I have to say bye to my daughter. Alright, I'm back. Sorry about that. Alright, so remember we were expecting that handle to the upside here? Now, if we do get up to the 20 mile in the 5-minute time frame, I am going to take a couple more puts at that level. Volatility is back up at 110.15, so our selling should resume fairly soon here. And I want to look at semis. Same thing as semis, we should be seeing the selling resuming very soon. Okay, I went ahead and grabbed a couple more puts here. Volatility is at 109.90, so not fully telling us that we're done buying upward just yet, but we have close the levels that I've been looking for, so that was the primary thing. Potentially we could see semis pulling up towards this 563 range, which that help create a right shoulder for further bearish structure. With the SPY, again, potentially that could be all the way up to that 728.58, which that would coincide with the 20-mile retest. Volatility at the 109.61, so pulling down very slightly. Now, if we do have our 5-minute 20-mile retest, I will be adding puts at that point. Now, I want to look at the HIG. HIG did pull down to 79.58. It's currently at 79.62. Semi's almost hit that level so far for that right shoulder. Okay, there's that left shoulder, potentially the head, form the right shoulder. Volatility at the 109.43. And we are at the 5-minute 20 mile. So I'm going to add a couple more puts into this range. All right, added my additional puts. And now we see if we reject that range or if we continue pulling upward. I am expecting a rejection of that range though. Semis did pull to the 564.61. So slightly above that left shoulder, but still holds liquidity for that. Also, we were expecting a handle on this cup regardless, so this still fits the criteria for that very well. Let me go ahead and delete some of these prior structures. So again, we did close that large inverse cup. And from closing that large cup, we do expect a handle to the downside. So that's what I'm looking for out of semis. We do have plenty of bearish structure still built. Volatility is at the 109.38. So I am looking for that to start picking back up again pretty soon here. Volatility at 109.64. So it is starting to pick back up again. So if this is the inverse handle to this cup, then we should be heading down, again to that 121 range. Volatility also has a cup and handle formed, which even though I usually don't look at that for structure, that's still telling us that very likely we're going to be seeing volatility picking up very soon. It's at the 109.53 currently. And semiconductors are slowly starting to give us that downside. I do want to see the ADL pulling down quite a bit on semiconductors to really show that we're going to be heading downward. Same for SPY. Going to be exiting the remainder of my calls here pretty soon. For semis, we do have to be a little cautious though, because this is creating kind of a cup and handle, which can lead to a breakout. But we still have that bear structure formed, so I'm not really fully anticipating that. But it is something we have to be aware of. Volatility at the 109.20, 109.26. 'Volatility is just slowly ticking upwards, so 109.35. Looking for it to pull back up towards that 110/111 range. 109.41. 109.45. So slowly ticking upward. Now I would like to see this small cup invalidated. So I would like to see semiconductors pull down to the 560.41 just to, fully invalidate that cup. And at that point, that would make it a double top. Volatility at 109.61. Volatility pulling down slightly, so 109.50. $109.26. And let's see what's going on with our HIG. 79.66. Again, I am looking for this to sort of reject this 20 mile on the 5-minute time frame, which is at the 728.28. But our ADL has been pulling up. Volatility has pulled down a little bit, so it's at the 109.24. Volatility is picking up slightly, so it was at the 109.24, it's at the 109.36. Back to the 109.27. Sorry, I wasn't looking at chat at all. Yeah, we believe in technical analysis here. Um, I don't know what all you're saying about all this stuff. Yeah, well, they're gonna get... Alright, so they're gonna be deleted. Okay, anyway, volatility back at the 109.52. Again, we are expecting this rejection from the 20 mile. Yeah, we're not gonna sit here and argue whether we believe in technical analysis or not while watching a technical analysis stream. Um, you can believe in whatever you want, but I don't just believe in this. I make plenty of money off of what I do. So, um, yeah, I don't really know what you're saying. Technical analysis is not just staring at lines at a chart. Volatility at the 109.58. And we are seeing semiconductors starting to pull down. So we should see this inverse cup close basically down the 554. I think it says 61.81, whatever that range is. Yeah, please don't spam on my channel and advertise other stuff on my channel. Not appropriate. Especially if you say you support me. Like, get out of here with that. Volatility at the 109.71. So we should be seeing our puts absolutely starting to fly here very soon. My puts are green, but they're not very, very green yet. So waiting for that $1 or $2 downside and then I'll be really happy. Volatility at the 109.75, so still picking up. And we have invalidated some of this prior bullish structure. These potential cups have been invalidated with these smaller inverse cups. So from these smaller inverse cups, we should be building a handle and then heading to the downside. Same with semis here. We have invalidated that smaller inverse cup, creating kind of that double top, or I mean that bullish cup, excuse me. Creating an inverse cup and also having that double top, which should definitely give us this downside handle that we're looking for. Yeah, I wanted to do that. I just didn't have time um, yesterday because I have to add a widget or something to make it so that it properly shows. And I don't know how to do that right in this second. I forgot to set that up last night, but I will get that taken care of. Yeah, but basically I want to add like a little clock underneath the price action here. What I'll likely do is just change my laptop over to, um, New York time and probably just have like a little clock watching that or something. Volatility at the 109.67. So we just need a little bit of continuation within our bearish structure to really start pulling downward. But we should be getting the pull down. Volatility picking up again, 109.78. Now we should be seeing semis pulling down pretty much any second now. This way it doesn't invalidate this smaller inverse cup. Looking for volatility to start picking up again pretty soon if we're going to see that invalidation occur. The ADL has pulled up quite a bit. And technically invalidated that inverse cup. So now we have to look at this as potentially a bullish cup to the upside. Very frustrating day so far. Which means that if we're going to go to the downside again, we have to fully invalidate that bullish cup. Same with the SPY here. Smaller inverse cup did get invalidated. Volatility is at 109.43. So this is what I hope doesn't happen, even though now that I'm saying it, it's going to happen just because the market likes to spite me. But if we pull back up towards this 729.97, basically the 730 range, this creates a larger bullish cup, which doesn't invalidate our previous bearish structure, but it just makes it, annoying again because then we have to invalidate that entire cup again. So hopefully that's not the case. But it's seeming very likely at this point. Volatility is at the 109.42, so it is ticking downwards slightly. So I'm really hoping we don't pull all the way up to the upper Bollinger, because again, that would create that bullish cup, which then we would have to contend with potentially forming a handle to the upside, or fully invalidating the cup to, invalidate that handle. So I'm hoping we don't pull all the way up there, but I do think that there is a potential that could happen currently. We're not that far away from it either, so it's getting closer and closer. Volatility is still very elevated at the 109.18. Don't mistake, the bear's structure has not been invalidated yet. Okay. Remember, we did close this very large inverse cup to the downside. And from that very large inverse cup to the downside, we can be forming a handle. Okay. So this has not invalidated the bearish structure we built this morning. Now for that to occur, we'd have to pull all the way up to the 731.84. Check semis. Semis having a little bit of buying, but not super convincing like the SPY. So if we can hit the 726.79, that would invalidate this cup right there, with this inverse cup. So we're going to look for that, see if that occurs. Volatility is picking up very slightly, so it's at the 109.33. I'm gonna delete some of these prior levels because we don't really need them too much anymore. Volatility at the 109.47. Semis need to pull down to the 560.11 to invalidate their prior structure. So we'll mark that level right there. We are starting to see volatility slowly tick back up again. So this can lead into, some of that adverse selling. It's at 109.59. A little too soon to say though if we're going to close this inverse cup. It does look likely, but today has been very, 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 very choppy. Volatility is at the 109.75. So if that continues picking upward, then we should be starting to get some selling in here. $109.81. We have to be really cautious because again that can be that cup and handle, which is really what we don't want. Volatility is at the 109.77. $109.82. So I'd feel really good if we can get this rejection to the downside. Um, that would really break a lot of this potential bullishness we're seeing in here. But we do need to see that 726.76. And it needs to happen pretty soon here. Volatility is at 109.95. I don't want to say anything and jinx it, so just gonna wait. Volatility's back at the 110.06. So we should be seeing our selling picking up very, very soon here. Same for semis here too. Just need to see a little bit of downside selling to close these structures out. Volatility's at 110.08. I live in Washington State. Sorry, I'm just reading through the chat. Come on, give us our downside. We need like another 40 cents. Volatility at the 110.25. Should be any second now. I mean, dealers are hedging positions currently. One 10.33. One 10.34. Come on, any second now, dealers. Let's go. With volatility being this high, this thing should be absolutely draining right now. Actually don't know how it's not. Because it's looking like if we start getting our selling to the downside, volatility is going to be picking up basically to that 112, 114 range. Which we're finally seeing our downside structure close. So all that bullishness that we had to contend with up there, we don't have to worry about so much. Looks like semis are getting ready to close that bearish structure too. So we should be seeing the selling kicking in pretty soon here. It's the VVIX, yeah. On the 5-minute time frame, this should lead from the 20 MA down to the lower Bollinger, which that lower Bollinger range would be, you know, essentially pushing us back to that 724.41. Volatility at the 109.88. $109.56. So pretty large pull down in volatility right there. So I'm watching semis closely because we're basically in between two structures. Again, on the 1-minute time frame. There's potentially that cup forming, but also potentially this head and shoulders. Still too soon to say which one it is, and that same pattern's holding on SPY as well. Volatility is at the 109.67, or 65, excuse me. Volatility is at the 109.39. And likely this cup is going to close to the upside. Volatility at the 109.18. If we end up closing this smaller cup and not having that head and shoulders, then I will tack on some calls again. We're just in between so many different structures right now. Really difficult day. We had our sell this morning down to that expected level at the, basically that 725 range. But since then, it's been giving us a little trouble. Now the ADL is still fairly weak here. It did pull up quite a bit for a while, but now it pulled back down and it's still looking pretty weak, even with the little bit of buying we have been seeing. Same for semiconductors too. And semis did not invalidate this head and shoulders just yet. So if we're going to see continued weakness in the ADL, if we're going to see our volatility picking upward, it's currently at the 109.18, then this could actually lead into some pretty decent selling, but still a little too soon to determine that. Now I'm going to mute for just a minute just so I can drink some coffee, but I'm going to be around. Alright, sorry about that, I'm back. What would invalidate the 722 puts? Basically the structure turning bullish. That's what would invalidate it. If we see this form a bullish cup here, if that turns into a bullish cup, closing, a larger bullish cup, basically heading to that 730, that would be the invalidation of a large majority of the puts today. Volatility is very, very elevated still, which is weird if we're going to be seeing buying. It's at the 109.31. This is starting to look like it wants to form a cup to the upside, which that's not what we want, but have to deal with it anyway. So if we pull up to the 729.49, that will close this bullish cup. Volatility at 109.14. We're seeing our ADL pulling up very slightly. Now, there's the potential that they could pull us into the 5-minute upper Bollinger without completing this larger bullish structure. And from that upper Bollinger, that would be a short entry towards the downside. So potentially we see that happen. I mean, I'd prefer not to. I'd prefer to just head downward, but potentially we can see that happen here. Volatility is at 109.12. Now it's very likely this cup's going to close here. Volatility is starting to pull down a little bit. It's at 108.77. So we do have to be pretty cautious of the upside currently. Now the upper Bollinger on the 5-minute time frame is at that 729.60. Now I am going to add a couple puts at the upper Bollinger here, which I can't really suggest because obviously the day has been very, very difficult on both ends. But with those puts I'm going to be adding, I'm also going to add some 733 calls. Because if we're going to get this upside and this is, going to invalidate everything, then we will be heading to that daily 5 mile. Daily 5 mile is currently at that 733, probably 733.20-ish range currently, but basically it's that 733 range. So cheap calls to the upside just to hedge. Volatility is at 108.40, so it has been pulling back quite a bit. Still very elevated though, but it has been pulling back. So those 733 calls going against all of my puts. Okay, and there's that cup close. So if you're, again, worried about potential upside, and if you don't have upside calls and aren't willing to buy them, then this would be the time to be exiting puts. Volatility is at the 108.19. Alright, so I have new puts added, those calls added slightly before that range. And now, once again, we're waiting for the breakout or the breakdown. Volatility is still pulling down on the day, so it's at 108.08. Now we still have a little bit a ways to go before we fully invalidate our previous bearish cup. So still about a whole, $2.50 to the upside. But if the market's wanting to be bullish, then that's what they're going to do. They're going to form a cup here, validate this previous cup, and head up towards that 733. I added the 725 puts, um, but I currently have a whole bunch of different puts. I have basically everything going from 723 all the way to 727. Volatility's starting to pick up a little bit here. Not anything really super convincing just yet, though. Now, either we're going to form a cup on this handle to head to the upside, or this is still that inverse cups handle to the downside. Again, we haven't invalidated the inverse cup yet. The larger one going all the way to that 725. So potentially this could be leading into, a lot of selling. But again, we do have that 733 hedged just in case we get our upside. But I still am biased to the downside today. Volatility is just very, very elevated. Even though it's pulling down currently, basically being above this 98 range means that massive, massive selling could take place at any time. Now we are seeing the ADL starting to pull down a little bit here. Semis are hitting their upper Bollinger on the 5-minute time frame as well. And semis also still have that large inverse cup formed. We were expecting upside, probably a little more upside than we expected so far, but this still can potentially be pulling down to form the handle on that inverse cup. So we'll see if that takes place. Volatility at the 108.15. So we'll just make sure to monitor that pretty closely. Did pull down to the 107.93, so that's telling us that so far dealers aren't preparing the downside just yet. And the HIG has been buying up. It's currently at 79.67. There's a lot of work to do to the downside to invalidate some of this bullish structure that's been going on. Currently I'm down $350 on the day. Volatility back at the 108.30. And I'll be happy to show my P&L when I get my computer set up, but I don't have it set up on my laptop. The difference between the ADL and the TTM. So I don't really know what the TTM follows. I think that's the TTM squeeze indicator. I don't really remember what it's called. But the ADL is following the money volume on the day. So it's tracking basically if there's inflows or outflows of actual funds. Volatility at the 108.22. So not really showing a major increase just yet. Volatility at the 108.38. Yeah, you're very welcome. Some are starting to pull down here a little bit as well, but we still have this bullish structure. A little bit of a head and shoulders forming here, which can form that larger inverse cup here. Just looking to see if we can start breaking some of this bullish structure. I think the IV will overcome the theta burn on those puts. Like just for this little bit of downside, um, remember I said I was down 350 on the day. Now I'm down 260. So, and we haven't even really had downside yet. So I think our puts will recover just fine if we're going to actually get the downside that we're anticipating. Volatility at 108.42. So we should be seeing this pull at least to the 20 mile on the 5-minute time frame, which is at the 727.82. From there, we'll see if we can get a further invalidation on some of these bullish structures. Again, volatility is very high today, so once we actually do start seeing some selling, um, the volatility should be picking up very, very quickly, and the selling to the downside should accelerate very quickly. Volatility at the 108.68. Down 180 on the day now. So puts are recovering very nicely. Just we have to be careful with this 5-minute 20 mile because potentially they can bounce upward off of that as well. But we do have some very nice bearish structure forming. Okay, we do have that potential inverse cup formed. We just have to break out of this bullish cup, okay, which means that we need to pull down all the way to the 726.76. Yeah, it's one of those difficult days today. I am looking for much further downside though. Um, Even though I'm nearly back to neutral on the day. Volatility is picking up still, so 108.81. We'll see if we get this inverse cup closing or not. It's looking very likely, but we also thought that prior as well. Volatility at the 108.77. Yeah, you're very welcome. And I know some people question my trading, but um, I've literally been doing this for years. And yes, I've only been streaming for about, what, 2 to 3 months, give or take. But I've been literally posting my trades every single day for years. Oh, give me a break, okay? It is very, very difficult to sit here and trade live with people watching. Every move you make, whether it's a mistake, whether it's a win, it is not easy. So, I appreciate it, Wonders. And I'm very happy for your success too. Volatility at the 108.92. So if we can see our volatility continue to pick up, and if we see our price action match that, then we will be heading down to this 726.76. But we need to see the actual selling. Yeah, that does not look like selling at all. Jeez. There was something just released about Anthropic though, so I want to read that. Let's see. Anthropic pursues first data center leases and seeks financial backing from Google. So we don't have a full invalidation of this inverse cup yet, but it's looking super likely. And volatility pulled down quite hard with that move to the upside. It's currently at 108.41. But that was that bounce off the 20 mile we talked about, which is frustrating. Yeah, and volatility dropping pretty hard at this point. 108.13. So we should be expecting that close to the upside. Which, that would be a larger cup plus the handle. So that's very, very likely telling us break out to that 733. Yeah, it's just very frustrating when it's like we had tons and tons and tons of bear structure, then it gets broken out very quickly. Bear structure forms again, even further bear structure forms, gets broken out very quickly. Further bear structure forms, gets broken out very quickly. Very annoying. But on the 5-minute time frame, this is looking very much so like wanting to form a cup to the upside. The thing that's really getting to me though is that we still have this very large inverse cup formed. And we haven't invalidated it. We also see the ADL just absolutely dropping on the day. Even on the 1-minute time frame, since that pull upward, it's dropping back down. Now this cup has not fully closed yet. And until that cup fully closes, it's not a bullish cup. We still have this formed inverse cup. And even though it's a very aggressive handle, this could still be that handle to the downside. So if we see a continuation within this selling that's going on here, and if we see our volatility pick up with this, then that'll be telling us that, okay, that's that inverse cup and handle, very likely heading to that 726.76. But we need to see the selling behind it. Now, I want to look at semiconductors here too. Same thing here. They did not close that inverse cup to the upside just yet. And because of that, this can turn into that large inverse cup and handle to the downside. Still a little too soon to say, but potentially they're working very hard to shake people out of positions. If they're actually going to be selling this, so if we can get a continuation to the selling here, that'll be very, very positive. Volatility is still very low. Well, It's elevated but low compared to where it was. So it's at the 108.13. Now, if semis do pull down to this 560 range again, it will invalidate some of this potential bullish structure going on. Volatility still sitting at that 108.12. So I'm gonna get more coffee really quick and hopefully this doesn't break out while I do that. So I'll be right back. Alright, I'm back everybody. Is this even a valid strat? Yes it is. I make a lot of money doing it. Been doing it for a long time. The market algorithms really like to trade with basically bullish cups or inverse cups. And you could see this, throughout almost any time frame. Where if you were just to sit here and look for cups, inverse cup, inverse cup, inverse cup, bullish cup, inverse cup, bullish cup, rinse and repeat. This could even be on the 1 second time frame, you know? You'll see constant inverse cup, bullish cup, bullish cup, inverse cup, bullish cup, inverse cup, bullish cup, inverse cup, rinse repeat. The algorithms really like to trade in those cups because that's usually where people are setting their orders. Um, they're trying to buy the bottom of those cups, selling at the top, or, selling at the top and buying at the bottom for those inverse cups. So it's a standard pattern that the algorithms just really like to latch onto. So what I look at is while I'm trading, say the SPY, I'll usually be watching what's going on with the HIG, the HYG, and this is the high yield corporate bond ETF. So this is telling us basically top echelon of equity risk, what's going on with that? Are we seeing buying or are we seeing selling? I use that kind of as an indicator. And then I kind of line that up with what's going on with the VVIX. Are we seeing the VVIX, pushing upward on the day, which is telling us that dealers are hedging positions because generally only very large money is going to be buying the VVIX contracts because these are futures contracts and they're built specifically kind of as an insurance to equity downside. So usually we see the VVIX moving upward very aggressively if, we're expecting selling or see it pull down if we're expecting buying. So we look at that along or as well as with our, price action on the SPY, right? And I'm looking for a lot of different things, not just inverse cups and cups, but those are something we know that the dealers like to latch onto, is they like to build cups and they like to build inverse cups. So with that, that gives us a lot of room to target the potential upside or downside with a lot of these moves. And you just kind of fit everything together to create the thesis of, are the dealers going to be selling the day off or are the dealers going to be buying the day up? So not every cup is going to be a very valid cup. And for example, let's say we're looking at this bullish cup when it formed. Okay. Before that inverse cup formed or anything, off of this cup, we, usually have that expectation that, okay, usually it's going to pull down, form a handle, and head to the upside. This pulled down and formed that handle, technically that cup was like kind of in that range, but if it pulled down, formed that handle, and, there's plenty of upside from that. Now, when we saw this very large inverse cup forming, we said, okay, cup closed, what's likely going to happen? We're likely going to see a very small upside. Now, this upside was a lot greater than what I expected, but we should expect a very small upside to continue pulling downward because with cups, they generally like to form handles. And currently, we're seeing this cup and handle playing out very well. And with this handle on this inverse cup, this is telling us, okay, this being the handle is also an inverse cup. What should we expect? A smaller handle on that to continue forming the downside. And where's that downside taking us? Well, it's very likely going to start closing this even larger inverse cup. I know, I'm just bringing out all the cups right now. Which, if that's going to take, then what's very likely going to happen? Likely form a handle, and then close this even larger inverse cup. So that's kind of how you can think about it, and I know this is just the downside example, but we also do the exact same with the upside as well, is that from the cup forming, you should be anticipating a handle, okay? And that handle is basically going to be an additional cup, and from that additional cup, you can expect an additional handle, rinse, repeat, until you get your price action. Well, that is why the channel is called Cups and Handles. It is primarily my favorite structure to look for. So I'm feeling pretty good about our downside here, everybody. Okay, this is looking very likely that this is going to close this 726.76. I know we've already kind of gone through this rodeo a few times now, but it's looking like this time is the time. And from that happening, we can expect sort of a big upside to this too, which is a little unfortunate, but there's this very large, cup there, which could be that left shoulder on this head and shoulders if we decide to build the liquidity for that. So we're not done. We're not done with the chop yet. Even if we get our level, very likely we're still going to be contending with this chop a little longer. So usually we try to enter on the top of the cup forming or within the handle. So for example, it's like in here. When we pull down to this 724.41, well, we automatically identified that this could potentially form a cup. So where would we want to enter on this? Wherever we find the top of that cup. Now, how do we know where the cup top is? Well, we use our other technical tools as well. We have the 5-minute upper Bollinger that's telling us that, okay, the market's overextended at this range. It's a good time to enter puts. And that's exactly what we did. We entered puts at that range. We also entered some hedge calls, but from the top of that range, we have now just been breaking down, breaking down, breaking down. And this is a very common pattern within the 5-minute time frame, is that we generally go from one Bollinger to the next. As you can see, push to the lower Bollinger, pulled up, pulled to that middle Bollinger, which is the 20 MA, they're the exact same thing. Rejected that, pulled back to the lower Bollinger, back up to the upper Bollinger, from that upper Bollinger, all the way back down to the lower Bollinger, from the lower Bollinger, all the way back up to the upper Bollinger, from the upper Bollinger, heading back down to the lower Bollinger. So we use that to also create really opportune times to enter contracts. Um, does it always work out? No, it doesn't. But no one has a crystal ball that hits 100%. Um, Mine has a couple cracks in it still, so till I get those fixed, I'm not going to be swinging for 100%, but I can hit a lot of them um, between identifying our structures and using our technicals. We have closed this smaller inverse cup here, and with that, that means very likely going to pull upward and create a handle to the upside before heading downward. Volatility is at the 108.37. So selling looks good. Our ADL has been pulling downward massively on the day. And again, the ADL kind of works like a bank account. So if it's pulling downward, that means people are withdrawing their funds essentially from this symbol. If it's pulling upward, that means people are putting money into the symbol. Well, today we're seeing pretty much nothing but downside, even with some of this buying that's been occurring. So I was a little nervous earlier, but not so much anymore. We should be getting our downside. That's all you got out of that, Pat? Was just the crack in the crystal ball? So we're looking for a handle here now, and continuing down in our structure. Volatility is at the 108.27, so if we could see that start to, climb back up towards that 109, 110 range, that'll give us the conviction that yes, we're very likely heading back down to that 724.41 because that creates a large inverse cup. So that's the level I'm looking for currently, and we're going to mark that out. Oh, I don't mind the questions at all. So what I have these green lines for is to show where we need to go to invalidate certain levels. Okay, and because we're, you know, bearishly biased today, what needs to happen for us to invalidate some of that bullish upside? Well, we needed to close that cup. So this little green range right there, that's exactly what that's showing. That's showing that bottom range of that cup. That cup range is being pushed. And where's this next range? That'd be our next kind of level we're looking to take out because that's where that next inverse cup will be heading towards. So that's what I use those little ranges for. Um, I'll do this to the upside too, if we're expecting upside and we need to invalidate specific bearish structure. Um, I'll mark those levels out because it's very important to know what's going on with our structure. Now on the 5-minute time frame, we are starting to push towards this lower Bollinger, which means that if we're going to be getting this handle, this is kind of that range to have them set that up in. But ideally I would just like them to just sell downward and make it easy already because today's been a very difficult day. So after we take those ranges, basically we have to look for a new range because no longer have to contend with this much. But I am keeping this marked because I do want to see, this inverse cup breaking underneath this level again. But essentially, once the level's broken, it does invalidate that potential upside within some of those previous structures. So, for example, we had like this cup right here. We were potentially forming this handle to the upside, but because we broke down and hit that range, now those bullish structures have been invalidated. Now, if we can continue pushing down to this 724, I will secure a little bit of put profit and leave some runners to run to that 721. Volatility is at 108.30, so we're not really seeing volatility massively picking up just yet. But if we continue with the selling, then volatility absolutely should start picking up pretty aggressively. And that's kind of what I'm waiting for at this point is basically the sink to get turned on, to really just rinse this thing out. Um, with this selling, with this ADL, with our volatility starting to pick up, which it picked up pretty decent there, 108.68. This is, kind of exactly what we're looking for. Um, Looking for volatility to start picking up. We're looking for our price action to start hitting these ranges that we've been kind of waiting all darn day for. But we very likely should hit this 724.41. I'd say it's extremely likely at this point. Volatility is at the 108.79, so that's just continuing to pick upward. A lot of the previous bullish structures have been invalidated. So we should be getting ready to really start picking up on our selling here. Now again, we can see a little bit of a pull upward because we have closed that smaller cup. Can expect a little bit of a handle. But it looks like the market's really trying to close this inverse cup here prior to doing anything major with a handle. So very likely looking for that to close prior to that. Volatility at the 108.63. Now I'm going to stream today until we hit this bottom 724.41. But after that, I'm probably going to go ahead and end the stream. I will still be holding some puts for the 721, but we're not gonna skip this range here. Okay. If we get our 724.41, I expect every single person in chat to be taking some profit on their puts. apparently Iran submitted a draft agreement. I think this is what, the 100th time now? Volatility at the 108.35. One minute time frame, I am kind of expecting a rejection off this 20 mile here. But potentially we could pull up all the way towards that 727 again. Volatility still increasing very slightly. So 108.38. Yeah, and on the 5 minute time frame, again, potentially we can be pulling up towards that 20 mile range before having a major rejection. But I'm kind of expecting a rejection before that. Volatility is very, very high. Of course, right as I say that, they start buying. All right. Let's see what semis are doing. Semis here too should be pulling down to that 554.81. Volatility at the 108.31. Go ahead and delete some of this. EDL starting to trend downward again. So we'll see if this decides to close this inverse cup. Bottom of that inverse cup is at the 725.57. Volatility is at the 108.45. They're really making us work today. This is a tough one. I don't use the EMMAs at all. I use the primary standard moving averages. The reason why I use the standard moving averages over the EMMAs or anything else is because the standard moving averages are basically like the most archaic um, stock market tool out there. I mean, it is pretty much the first indicator that was ever introduced to the stock market. Um, Everything is built off of those moving averages. So I like using the moving averages because everything's built off of them. They tell you exactly what you need to know for the most part. So I focus a lot on the Bollingers and the ADL because the Bollingers kind of tell you, well, let me take a step back. So the way I always explain the Bollinger Bands is basically like a road, and we're gonna make this simple, but might seem stupid, but it's not. Okay. You have a nice yellow sports car here, and you're traveling along your road. Okay. What happens when you go off the road? Usually you don't want to be off the road. Usually you want to be on the road. You want to be between your Bollingers. You want to be in your lane on the road. Um, Usually you don't want to be taking your sports car off-roading. And when that happens, that's telling you that the market wants to pull back onto that road. So that's why I have the Bollingers set up the way that I do with the very pronounced white lines, because basically that's like a roadway. Um, that's telling me exactly when the market is overextended or underextended. And that gives us, very, very, prime opportunities to take contracts to have a large reversal. The ADL tells us the story with the money side of things, where we can determine that, okay, they're selling off today or they're buying. Well, clearly today, they've been selling off. Um, May not seem like that too much within the price action, but very likely this is going to pick up into some deeper selling within the trading session. Again, I'm looking a lot closer to that 721, 23 range, but the ADL has just been telling us that funds are leaving this symbol. Um, so with funds leaving the symbol, with our extensions either to the upside or the downside, we also have our moving averages, which I don't show on the 5-minute time frame, but I focus on these levels on the daily time frame because on the daily time frame they're very, very crucial. For example, the 5 mile today is at the 733.09, which means that the lower bounds of the 5 mile, which that's something I've kind of coined as the lower and upper bounds of the moving averages, is that $1 to $2 below the level and above the level usually like to be tested if the market is going to try to claim that level. Now, what do we see today? We see that the lower bounds of the 5 mile was rejected almost to the penny. Okay, and from that, we have just been in a straight, pretty much downside since then. Hasn't been a very clean downside, but it has been a downside. Um, so it's a very useful tool to be able to map out, those moving averages because on the daily time frame again, where's our nearest support? It's either the 5 mile above us or the 50 mile below us. Okay. Um, if the market's going to reject the 5 mile, then where are we headed to? Very likely towards that 50 mile. Plenty of bear structure building now. This is very good. Our 724.41 should be hitting here literally any minute now. What a stressful trading day. Yeah, a road made of cups, exactly. I could just imagine having a car that like looks like a giant teacup or something. But yeah, you get my point. Um, so I try to think about it very simple like that, and sometimes simple is good. You know, you don't have to have super complex mechanics to understand how the market works. Um, even though these are very complex mechanics when you really break them down. I know I'm trying so hard not to laugh about the road made of cups. So we should get our level, okay? And when we do hit our level, I am definitely taking profit on some of my puts because today has been just unbelievably not what I like. I did not expect the amount of chop today that we've gotten. So I have my market conditional order on a lot of my puts at the um, below the 724.45. So when you set your market conditional order on Webull, I just have it set to less than that 724.45. So that way when we hit that level, I don't have to really stress out about clearing contracts or anything. The market will automatically do that for me. I'll be very green at that 724 mark, and I know it's kind of unfortunate for people who can't continue taking contracts, um, but taking these puts up here when we talked about it have been massively profitable. I remember someone was saying, "Oh, I warned you guys about those 730 calls." Um, yeah, those are toast. These puts from up here are absolutely blasting. Um, so when I hit that level, uh, I'm gonna be, immensely in the green today. I think, Jin, we'll talk about it when we get down there. Okay, I won't leave you hanging before the stream ends. Um, but there's a few things I really want to see before I have you hold a position below the range that we're expecting to sell at. I really want to see volatility absolutely flying. Okay. Um, we essentially have 2.5 hours left in the market. So we still have some time before that happens, but I don't want the situation to happen where they start creating a handle upward, and then all of a sudden that turns into buying and invalidates this entire structure. That would just be the absolute worst case scenario, and I don't want that for you at all. Okay. Um, so we really need to see what's going on down here. We need to see, are they going to try to break down below that range a little bit? If they do, I want you to take profit there. Okay. Um, but if we also see volatility like massively pick up, then we'll also, discuss that. Just the worst case scenario would be that your contract isn't green, but at least it's not as red. But then we suddenly get this move to the upside and it just completely just kills that contract. That would be the worst case scenario, and we don't want that. Um, Today might be one of those days where it's like, I would rather you take the smaller loss, even if there's the potential for that to run really hard. Um, but with that said as well, once we do close this cup to the downside, we are expecting that small handle. Okay, because that will be a very valid, um, inverse cup. Okay, and we also have the very large inverse cup from this morning. This could be that handle that we've been talking about all day. And from this handle, this should lead into a larger breakdown. I don't want you to miss out on your profit or, taking a less of a loss or anything like that. Yeah, I would do that. You see, I would let that lighter put run just in case, because once you do push down to that 721, um, yes, that 712 is still going to be super out of the money, but at least it's going to very likely gain some premium. Um, but at least you wouldn't be risking, losing out on a major position potentially. Volatility is still very elevated at the 108.40. Now I do want to look at semiconductors really quick, just to see what's going on here. So semis, they did close their cup. Okay, that's very good. From that inverse cup closing, they are working on a small handle. Small handle should lead to the breakdown. But potentially we could see this pull back up towards that 20 mile range, which is at the 561.40. So potentially that can occur, but we have closed this large inverse cup. Now for SPY, this cup right here is targeting this liquidity range, not this entire 724.41 just yet. So still very valid, building an inverse handle to continue pushing downward. So I'm not too worried about my positions right now. I think we're going to do just fine. But they, of course, are going to chop us up a little more, so. Yeah, today's been a very difficult day. Seeing a little spike in our ADL currently. On the 1 minute time frame, this is pushing us above the upper Bollinger, which means that we can be pulling downward. Well, we just got some sort of good news. Okay. Hold on. Well, I don't see the news just yet. Um, but let's check USO. It's coinciding with USO almost directly, so it is something based with the conflict, which is very frustrating. Reports citing Israeli officials say the US has asked Israel not to conduct independent strikes on Iran for now, with Washington preferring to handle any immediate military response itself while pursuing negotiations. Really? That's what the news is going to be? Yes, so President Trump just posted something. So annoying. He's canceled all scheduled strikes and bombings against Iran this evening. Discussions and final points have been in both concept and great detail approved by all parties involved, including the United States, Israel, Saudi Arabia, Qatar, blah 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 blah. The naval blockade will remain in full force and effect until this transaction is finalized. Time and place of the signing to be announced shortly. So that sucks. I mean, not that I don't want the deal to be, but that's nonsense. Okay. Well, that's the puts for the day. Um, Not happy about that. We're only a few cents away from taking profit too. That sucks. At least the 733 hedged calls are doing okay, but still down on the day. As you can see with the 5 mile retest here, it almost hit to the exact level at the top. Yeah, that's a bummer. Yeah, this is not making me very happy right now. I hate that we have a market moved on tweets. Isn't the first time I've been absolutely burned due to this, so. These 733 calls are doing good, but not paying out for what the puts lost. Yeah, and our volatility is just dropping on the day. It's at 104.98. Was basically up at $800 on the day. Now I'm down over 1,000. So, thanks, Trump. But doesn't mean that we can't make this still a good day. It's just going to be a little difficult now. So, give me a second to look at everything. We are seeing an overextension in the upper Bollinger, currently at the E5 mall. See the HIG buying upward pretty aggressively. So I'm taking some of these 730 puts here. Because even with this news, I think that potentially we can reject the 5 mall. So I sold my 733 calls. Okay. I am currently in 730 puts. Pretty much invalidated all the bearish structure that we were looking for on the day. And potentially we need to be looking for that 738. But with this current trade, I'm going to be taking this from the upper Bollinger to the 20 mile to work on recouping a little bit. Twenty mile being at the 729. That means these 730 puts should do very well. But we do have the potential again to pull up all the way to the 738. So volatility did pull down to the 104.51. It's currently at the 104.55, so still very low on the day compared to what it was. But again, I am targeting puts in this range to get back to the 5-minute 20 mile. Technically, we can buy all the way up to the 738, so just be very, very cautious here. Yep, it definitely can form a cup to the opposite opposite side, which that's kind of what we're looking at now. Is that potentially we have this very, very, very large cup all the way to the 738. So that's a very, very large potential in the day. I just want to short it back to the 20 mile. Be able to recoup a little bit. So let's see if we'll get any selling. Volatility is at the 104.24. Was that the 104.01? Again, I'm just looking for this 20 mile here. Potentially forming a little bit of a head and shoulders here. Which if that completes, then we will get our 20 mile to the downside on the 5-minute time frame. So waiting to see if we can get our downside, which we're not going to be expecting a whole lot of downside at this point. The 5 mile is currently at the 734.69, so it's extremely likely the market's going to try to gravitate towards that range towards the end of the day. But we still do have some downside to claim with the 5 mile here, or with the 5-minute time frame. Volatility slowly picking back up. Sorry, I'm not talking a whole lot. Kind of just very, very upset about what happened. 733 calls did good, but again, did not pay off today. I mean, you could say they were accumulating, but I disagree with that. The ADL was pulling down the entire day. Um, where was the accumulation in here? The HIG was selling, volatility was high. If we didn't have that tweet, we'd very, very likely be at the 724 below right now. Head and shoulders still forming, so we should be getting our 5 mile or our 20 mile retest here. I'll have to look at the OBV. I just, throughout everything I was seeing, nothing was telling us that this was coming other than, um, random Trump tweet. We even see that within oil. He was holding very steady the majority of the day, and then second that tweet hits, boom. Semiconductors, same thing. There was that expected handle that we were building right here, which is that little pop. But the big buying, you know, completely outweighed the day within the selling side anyway. Which this did not pick up until literally right as that tweet went out. So I'll have to check the OBV. I mean, even within the OBV here, it's telling you it's just trending downward. Wasn't until right when that tweet hit. Well, I was having a very good day, and it turned into a pretty bad day very quickly. Even with the hedged calls, they just did not pay out my puts. Um, kind of disappointed in that. Not a lot we can do at this point. I mean, second we started seeing that buying even before the tweet came out. Um, we checked oil and we saw oil was dropping, so that's how we knew it was going to be related to Iran. So let's see if we can get our 20-mile retest to the downside. So let's check our volatility, see what's at. It's at the 104.92. So the 20-mile on the 5-minute time frame is at this 7:30:11. Sorry, I'm not talking a whole lot. I'm just not in a very good mood right now. I really dislike having positions be up 800 something dollars and then all of a sudden in the span of 30 seconds down 1,000. It's really cool. That's even with the upside hedges that I had. But our new puts here are starting to do some work, so that's positive. Potentially we can recoup some of this day, as terrible as it's been. But we did enter puts there. Again, we're looking for this 20 mall on the 5-minute time frame, which would also be a rejection of the daily 20 mall or the daily 5 mall. So potentially, even with the good news, there can be some selling going on here. If we get our 730, then I should be close to neutral on the day. I'm still just not happy about that. I really dislike when news events cause massive reactions like that. I made some money on puts. I made some money on calls, but these puts down here, were basically turning in the money and, they were up over $800, looking to be a lot further than that, and instant melt to, basically zero. I mean, thankfully we did have some hedges going because that would have been even worse of a loss, but it was still very unexpected. VVIX is at the 104.70. It is, I don't play into that much. Of course the markets are gonna have manipulation, but we just have to kind of trade around it. It's a little difficult when the market shoots up basically like $10 within the span of a couple minutes. So being very patient here for our 20 mile exit. Market's looking very likely it should at least give that to us. Volatility is at the 104.81. Yeah, I could see that what you're talking about with that incline there. That's reasonable. But it's still very hard to say that that was gonna, you know, basically be incepted from that. Um, this could have very well continued downward. Because even with the ADL on the 5 minute or on the 15-minute time frame, we see it pull up, but then it pulls down basically to the low of the day. Um, negative 36 million on the day, and then it just absolutely climbs. Volatility at the 104.39, so not really giving us too much of a signal whether we're going to head down or not. The reason why I say it's not giving us too much of a signal, even though, yes, we could say obviously it's pulled down on the day, but it's already done that massive leg down, and ever since that leg down, it's just been kind of chopping and slowly heading upward. So it's hard to say that we're going to see continued buying at this point, just through the volatility alone. But semiconductors have invalidated all the bearish structure. And now we have that potential cup and handle we talked about. So 5 minute Bollingers are expanding though, so we can be pulling up towards the upper Bollinger again. Just something to be cautious about. I'm still looking for the push towards that 20 mile. going to drink or take a drink of my coffee really quick, so I'll be mute just a second. Still looking for this 20 mile exit for these puts here. So when you took those 730 calls up there, did you hold them all the way down here, expecting this to happen like that? I guess that's my question to you, because it's easy in hindsight to say that what we did was a mistake. But you were talking about 730 calls up here. I know, but Jeffrey's saying there's bullish divergences on the 15-minute time frame, which I can kind of see what you're talking about with the OBV. But going through this tick by tick, if we were at that level, I mean, is that giving you that bullish conviction? You basically dropped from that 730 all the way to the 725. Um, before starting to see that buying. Then it pops up very, very quickly after that. Because based on all the structure and everything, if this news didn't come out, the OBV would have been pulling back down. So I don't really see the bullish, indication there. I mean, I see a little bit of upside, but we saw that very clearly. Started pulling back down. From the bottom of this, we did expect an upward handle, but this was a massive news release. Um, Really nothing within the session right here is telling us that we were going to have that massive pop to the upside. And if you did know about that, then, you're a much better trader than I am. And I don't know why you watch my streams. Because nothing from me was telling me that that was coming at all. We had all the structure for the downside. We were very, very close to that level 2. literally stepped pushing down. The volatility was climbing as this was going on until that candle came out and the news release happened. So it's hard for me to say that there was bullish indicators here when, you know, it's easy to say that after the fact, but in hindsight, you know, I know you were talking about 730 calls up at this range. It's just frustrating when people come in and act like that they knew exactly what was going to happen. It's like if you knew what was going to happen, then why are you even watching my stream? You know? You should be out being some super millionaire trader. Instead, I get asked about my P&L. I get asked about different things. I get questioned about stuff, which questioning me is fine. I don't mind questions, but you really can't tell me that 15-minute time frame looked like a bullish divergence. I mean, there's just no way. We had the structure building downward and everything. We had volatility picking up. The only reason why this looks like a bullish divergence now is because in hindsight, we had that massive tweet candle. So I just get a little upset about that. I mean, literally nothing about this looked like bullish price action. Before we saw that candle, what were we doing the entire session? Basically breaking down. We rejected the 5 mile. Um, we rejected that lower bounds of the 5 mile almost to the penny. Broke down, couldn't complete this cup. Instead, worked to complete that inverse cup to the downside. Continued pushing that downside. And this was looking super convincing in here. Volatility was up at like 110 at that point until we had that tweet. So it's hard to say there's a bullish divergence there, you know? This is something that would have caught me basically 10 out of 10 times. Yeah, thank you everybody, and I do apologize that we didn't catch this. Um, I guess I just didn't have the insider knowledge that I needed, but um, maybe next time we'll know to grab calls right before the lower Bollinger push for the Trump tweet. It's just very upsetting because I know a lot of people were in puts and everything was looking very, very, very solid for us to get our downside. I know that's what I said earlier is that I need to get a crystal ball that doesn't have any cracks in it. Anyway, everybody, I do have to go because my daughter is gonna be home any minute and I have to take care of her now. Um, The only position I'm in right now is these puts that I took up here. They're still struggling a little bit, but I am looking for this breakdown to the 20 mile. And if we can get that breakdown to the 20 mile, we'll be able to recover a little bit on the day. Um, but other than that, I do apologize. I'm just gonna have to look at this for hours and see if there was really something that we could have caught. But anyway, I hope everyone has a great day. I do apologize for the losses on the puts. I was up very high on the day, and within a minute that changed to being, down over $1,000. So I'm not very happy about that. Um, I take losses pretty hard because I usually try to focus very much on risk management. So today was not a nice day to me. Even though I had puts or I had calls hedged to the upside, they did not cover out the puts. So I'm upset about that. A little upset at myself for not hedging more calls, I guess. Um, but with that said, I will be streaming tomorrow at 9:15 a.m. Um, let's try to make tomorrow a much better day. Okay. Um, hopefully we don't have any crazy tweets that, completely blow our positions again. So with that said, I hope everyone has a great day. Um, it's gonna be hard to have a great day now. Let me tell you, I'm not happy at all. Um, but yeah, I will be live tomorrow, everybody. Uh, thank you so much for watching, and I will talk to you tomorrow morning. Take care, everybody.